So in this video, I'm going to be explaining the ICT London Killzone, and I'm going to be giving you an actionable step as well for you to basically go ahead and try on your own after the video is done. So without further ado, let's get into it. So the London Killzone. So I'll give you a strategy to backtest all of that, but these are the key timings: 7 a.m. to 10 a.m. UK time. So set your chart to London right there and UK time. Then the pair that we're going to be looking at is Euro USD, as you can see right there. And these are what we're going to be looking for: the Asian sweep, the London sweep, which I'll explain, the mitigation of a high time frame point of interest, a look on a 5-minute, 10-minute, or 15-minute for possible reactions. Now you'll be looking for candlesticks, so you'll be looking for engulfing candlesticks, you'll be looking for dojis, things like that. So we're going to be looking at that on a 5, 10, 15. Then we're going to look for a chalk or a market structure shift on the lower time frames, 5-minute or 1-minute, and we enter at any one of these, but that is up to you to decide. So this is what the strategy looks like in a nutshell. Okay, we have the Asian highs, we have the Asian lows. Asian high right there, we have the Asian lows right there, or Asian high can be there. Okay, now the timings of the Asian range are as follows. We have midnight UK time to 6 a.m. UK time. 6 a.m. or 5 a.m. I'll just say do 6. I'll say, so ICT says 7 to midnight, so you know what, I'll do 5 a.m. for this. So midnight to 5 a.m. is the Asian range, and we're going to be looking for a sweep of the high or low, tap into a previous point of interest, and then we're going to be looking for our entry model in this piece of price action. Now, what does the entry model look like? So this piece of price action, if we just zoomed it in, something like this piece of price action is basically this. We're going to be looking for a sweep, we're going to be looking for a break in market structure or a chalk. Then we're going to be looking for a point of interest from this leg. This could be a fair value gap, it could be the order block, a supply zone, like that. And essentially we're going to be trading that down. So this is the entry model with a potential POI there. Okay, and we'll be looking to play that down like so. So this is pretty much what we're going to be looking for. Now, certain things to note is that we're only going to be looking at entering at 7 a.m. and 10 a.m. between that time. So if the break in market structure right here happens at 10:05 or 10:01, then it's not a valid trade. Also, if the break of structure happens at 6:59, it's not valid as well. So these are the things to note in your notebook if you're taking notes on this video, and that is the strategy. So now we'll get into some examples, and I will show you the actionable steps for you to do. So we can just delete this really quickly, and I'm going to show you some trade recaps using this. So if we look here, let's go to, so I took a trade right here. So if we just replay this right there, okay, what are we looking at? So from a high time frame perspective, you can clearly see that we are quite bullish. And if you count that as a break of structure, then we're pretty much doing this: going up, going down, going up, pulled back, going there, pulled back, now going up. That will be the final target. Okay. Another thing going for this trade are the multiple wick rejections, as you can see there. So an understanding of candlesticks is very crucial because they are basically your reading price. So multiple wick rejections, so another sign that we are going to go up. Then on the 4-hour, we had we're looking for buys, right? So dropping down to the 1 hour, we have this point of interest right there, right below the Asian low. So we have these points of interest. There was news at 7 a.m. That's fine, because after 7 a.m., if there's a break of structure, then we can take that. So we have this, we have wick rejections, we have the Asian range right there. We have this point of interest, which on the 30-minute, let's see if it was anything. So we have this, which caused a imbalance, which was right there. So this POI caused an imbalance. What else did the POI do? Well, there is clear inducement right there. Okay, liquidity for the POI to come, for price to come into tap and then go up. So there's inducement as well. Furthermore, there's also a sweep zone, right? There was this liquidity, we came, swept it, and then this POI was created. So it swept this liquidity. So strong POI. Then when session came into play, 15-minute, okay, we tapped in at 7:20, so we are in the kill zone, because the kill zone is 7 to 10. Okay, 7 to 10. So we have our first confluence, which is the Asian low being taken. So as you can see, this is the lowest point. That is the Asian low, and the indicator I'm using is this one, and these are my settings for it. So you can copy that. So the Asian low has been taken right there. Now the London sweep has happened as well. So what the London sweep is I want to see a sweep of liquidity at 7 o'clock. Okay, so if this is the Asian range right there, okay, so this ends at 5 a.m. or let's say 6 a.m. Then let's say at 6:45 or something, we are here. So this is 6:45 right now. Okay, and then we get a nice break of structure right there, and this would be the entry model. But what I found is that this is low probability because the highest point was created at 6:45. At 7 o'clock, starting of Killzone, which could be here, don't ignore all of this. But starting of Killzone at 7 o'clock, we want to see this point being swept because the highest point right now is at 6:45. We want the highest point to be 7 o'clock or above. So then what happens is we come up, sweep this, then we get our market structure shift and go down our chalk. So that is the London sweep. So we've had the Asian low sweep. We've had, well, 7 o'clock did actually sweep the Asian low, so London sweep as well. And then look at this on the 15 and 10 minute, look at that reaction we're getting. Okay, so if you know about candles, that is an engulfing candle. It engulfed so many of these candles. Also, it broke this fair value gap right there, so it becomes an inverse fair value gap. But let's keep it simple. Strong reaction from this POI that we already marked. Okay, then what am I looking at? Go on the 5 minute. Do we see anything? Yeah, we do. Strong impulsive candles. Then we're looking for a break of structure. So we want to see a swing high or swing low broken. A swing low is this, with a higher low to the left and a higher low to the right. A swing high is this, with a lower high to the left and a lower high to the right. So that is what we're looking for to be broken. One more thing, a valid chalk is this, okay? Down, up, down, and a break of this. A valid chalk is not this. Down, this. This would not be a valid chalk. This would be the valid chalk. This swing high, okay? So now, going here, what do we see? Swing high right there, but this is something to note as well. This is a swing high. Look at the high, 245, 108.245. The high of this is 108.245. So this literally just touched the high. So if those are equal highs, then I'm not taking a trade. I'm looking for the next swing point. So the next swing point is this one right there. This becomes a chalk. Now, what am I doing? We can enter here. We can enter there. That is up to you. So let's say that we entered, I'm just going to enter pretty much at equilibrium. So like something around there. 8 pip stop and target Asian highs for 1.83, or just go for a standard 1 to 2. So then if we play price forward, taps it, and literally just goes. And this is all taken, I posted it on my Instagram, all of that stuff. So this is an example of the entry model and the whole strategy working. Now I'm going to see if I can find another example. And then after this, I'm going to basically let you go on your own and backtest the strategy. I've given you the template already in my previous video for backtesting. So now all you have to do is go and backtest and collect data. So now it's up to you. And that is the actionable step. So I'm going to go to this trade on the 1st of July. And what do we see here? 4 hour, clearly bearish. Let me just delete all of this. 4 hour, we were clearly bearish. In terms of equilibrium, we were above equilibrium, and this massive imbalance was right here as well. So strong POI, which has inducement right there, strong liquidity, and also you could argue trendline liquidity for us to tap into or sweep and then carry on going down. Something like, oops, like that. You get the point. We have that. Also, this caused more imbalances and it caused this whole break of structure. So this was the leg, this POI was involved in the leg, which caused a major break of structure. So strong POI. Now dropping down to the 15 minute. Okay, what do we see? So we have 715 there. So we have the London sweep and the Asian sweep already ticked off. If this was 655 or 650, then I would want to see at 7 a sweep of the highest point, and then I'll be looking for whatever I'm looking for. So at 7:30, look at the reaction we get on the 15 minute. And on the 10 minute, we get this reaction. Look at that, another reaction from the 10 minute and a strong engulfing candle on the 15. So dropping down to the 5, what do we see? We're coming up, swing low right there. So that is my change of character. Plus we have imbalances to enter off as well. But for the sake of the video, I'm just going to enter right there. We'll go with a 9 pip stop, or we can go 8 pips as well. And look at this, the breakup structure happens at 7:40, okay? After 10, we're not taking the trade. Target a fixed 1 to 2, tagged in right there, and we get hit TP. Now, the things for you to test are, I'm going to give you as follows, but if you targeted Asian low, I can't remember if this was hit, because there was news. Okay, it was hit, but this was after major news, so that's something to note in your backtesting. But the things for you to test now, the strategy has been given to you. I've given you everything. I've given you 2 examples as well. So the things you need to test are 5-minute versus 1-minute entries. Find out which is the best one for you. Another thing, are you going to target a fixed 2R, a fixed 3R, or Asian liquidity, the Asian high or Asian low in opposing cases? So if you're buying, you're buying to the Asian high, and if you're selling, then you're selling till your Asian low. So that's something to target as well. And note, something else is wick breaks versus body breaks. And the last thing is, what are you going to enter off? It's going to be EQ, FVG, or an order block. These are things for you to test and note in your backtesting. But I'm actually going to come up with a Excel trading template as well. So if you don't know how to use Notion, you can use Excel, and I will be coming out very soon. I'll make a video on that soon as well. So that's the way to backtest. Now, one last thing which I forgot to mention is that you want to be buying above the midnight opening price and selling. Sorry, you want to be buying below it right here and selling above it. So if we have our Asian range right there, we have our midnight open right there. I want to be buying in this area right there. If my entry is above here, that is not a valid trade. Similarly, I want to be selling above this line, okay? Midnight opening price, and the indicator I use for that is this one, the midnight open, and these are my settings. So that is a setting, that is a strategy, that is the London Killzone simplified. Test this, build confidence in your own edge, and find out what things work, test out variables here and there, and then get back to me if you have any questions or anything like that. So that is it for today. That is the London Killzone. I'll catch you in the next one. Happy trading. Stay safe.